Hi, good evening, everyone. Firstly, I would like to thank SBR for the award. This is our 10th year as a REIT. We celebrated our 10th year anniversary in January. So I'd like to thank my team up here for the wonderful work that they've done and for getting the award.
So it's important for REITs to move towards having green buildings because increasingly we're seeing the impact of climate change, extreme weather variances, and also not just that, we're seeing tenants, occupiers now demanding green buildings. So we're also seeing regulators increasing the requirements for green buildings. So REITs must move towards green buildings. OUE REIT has 96% of our portfolio being green certified. And the second point of why it is very important to have green financing is basically we're seeing the traditional wallet for loans remain the same, but the wallet for green financing is increasing tremendously. Green bonds, sustainability linked loans. So as REITs, we must participate in this and we must take advantage of the fact that this wallet is growing and it allows us savings when we hit certain metrics. The final point, obviously, is investors are also concerned with green buildings and also ensuring the investments are green. So one of the criteria that they've now added on to their very, very sort of wide number of criteria of whether or not they acquire a certain asset, they participate in a certain company, they buy the shares of a certain company, is whether the buildings are have sustainability linked loans in place and whether the buildings are green certified. Now, if they can tick the box of these two, then yes, they will consider us. So OUE REIT believes having this in place allows us to broaden our investor base. The first benefit is we show our commitment to sustainability by participating and by undertaking sustainability linked loans where it tracks our performance in terms of hitting our sustainability targets. The second one obviously is once we achieve these targets, the REIT does benefit from interest rate savings as well. So it's a positive kicker for the REIT's earnings. Now we undertook the 978 million sustainability linked loan back in June 2022. Now when we started, as context, the May 2022 was when the Fed first hiked the interest rates. We were quite concerned the Fed would hike quite quickly, which they have done. There's been 11 hikes since May 2022 until today, 500 basis point hike. So it's quite a steep hike. We were trying to target completing the sustainability linked loan and drawing it down by August. But we wanted to achieve quite a few things, not just the speed, but we wanted to move it from a secured to unsecured, and we wanted pricing to be a lot tighter. So it was very, very challenging, but the team worked really hard. We went out, we talked to over 200 bankers, we had multiple meetings during this 3-month period, and we were able to get it across the line just at the end of August. This basically means by then we actually followed that up in 2023 by undertaking our third sustainability linked loan, so 430 million. So from moving from 30.9% in early 2022 to June 2023, we moved from 30.9% to 70% sustainability linked loans. Yeah, so we moved it quite far in that a very short time span. Now, what that allowed us to do was it allowed us to actually lower our cost of debt. It allowed us to widen the pool of financiers for the REIT. So S&P Global assigned us a BBB- investment grade rating with a stable outlook in October 2023 in recognition of the improvement of the overall portfolio performance and also the fact that our capital structure had strengthened tremendously during that period. Now that investment grade rating allowed us to enjoy a 25 basis point reduction in the bond we had issued in April 2022 of 4.2%, a 5-year note. So step down 25 basis point meant that 5-year bond became 3.95%. So in today's context, it is actually very, very cheap financing, because 6-month SORA today is 3.7%. So very cheap financing. So we're able to enjoy a lot of the benefits of undertaking that sustainability link. Obviously, the first way is we look at the very basics. So the equipment, for instance, chillers which are 20 years old are inefficient, they don't meet emissions requirements. So if it's time, then we switch them out. Okay. Now the second aspect of it is we look at what new ideas, innovations are out there. So for now, one of the examples is we're looking at district cooling system. So being able to plug into the district cooling system, we take out the chillers, we're able to access a wider sort of a platform in terms of energy efficiency. And obviously, the last one is we must engage with the tenants that we have. We must explain why we're on this journey. We must get their buy-in. So when they actually do a fit out, we have a guide, tenants guide for green fit out. What are the best practices? We encourage them to practice that. We encourage them to share their energy, their emissions, their water consumption. So and try together to think of ways to reduce that. So these are the sort of 3 key areas we focus on. So when we look back in 2023, our energy intensity, we had reduced it by 21%. Our water emissions, consumption, we had reduced it by circa 11%. So we had hit a number of these targets, and we thought, and a lot of it was based on intensity, especially energy intensity. So then we looked forwards and we decided these targets were set a little bit a while ago, and these were for 2030. So we decided to be a lot more ambitious. So we worked with our sponsor, OUE Limited, and then we looked at the sustainable taxonomies, we looked at best market practices, we benchmarked against peers, what else the other countries were doing in terms of greening their grid, what Singapore is doing, availability of alternative sources of sustainable energy. So we then recalibrated our targets. So very importantly, we moved from intensity reduction to absolute reduction. So what that means is, if we were to acquire another building, we were to grow, that building must actually be net neutral, net zero. Otherwise, we would actually be increasing our absolute emissions. So which means we have to be a lot more proactive, not just on our existing assets, but also on future acquisitions. So it's a big commitment, right? The other target we had set for ourselves was by 2030, we must have at least 90% of our financing being sustainability linked financing in place.